All right, we're back. This is Market Forensics, episode 9. Fields don't lie, platforms do. And they say men lie, women lie, numbers don't. Yeah. It's in the numbers, and it's in the field, right? If you really feel it's really real, you know who it is. It's I, the kid, Mr. Wall Street, Big God, Don Wick in this bitch. Now, we're past theory. No more smart money poetry. At this point, it's about receipts. I want to actually show you what perfection looks like, what smart money in action looks like. If you can't show the feels, then at this point, don't preach the gospel. So, episode 9, we pull back the curtain. Strap on your seatbelts. We're live. So, retail traders, they're taught institutional theory. They're taught smart money, but we talked about it in some of the previous episodes. It's on dumb pipes. Smart money on dumb infrastructure, on platforms that don't offer institutional tools. You can't track smart money without smart infrastructure, without market depth, order routing, or an audit trail. You see, one is simulation, the other is pure truth, poetry in motion. Okay? Clearing firms, clearing houses, true depth of markets. One has limitations, no audit trail, no clearing, right? Really just theater. The other is actually used for professionals. So in this episode, we go a bit deeper. We're digging in. All right. So understand we have MetaTrader 4 is probably the most popular platform out there. All right. And mainly because it's general ease of use versus other platforms. And it's the one that's kind of pushed and promoted by most of these influencers, these finance influencers or charlatans, much like Charlene. But if you look at MetaTrader 4, I mean, it's very limited in terms of the information that you have to be able to truly take trades. MT4, it was built for smart money, right? I'm sorry, I said that wrong. Let me say that. It wasn't built for smart money, right? It's a price display engine. It's not an execution terminal, mainly because there is no real market depth. There is no ladder, no routing, no level two, just price candles and faith. Really just hope candles, if you will. So you see on the right, we've got true depth of market here. I mean, if you really want to go further, we could talk about the delta skew, being able to truly understand who is in control, bulls or the bears. And we can do that by understanding the true depth of the market. And even more so, there are other tools and other resources like Bookmap that will allow you to overlay these over the chart. And if you're not trading with the right platform, it's going to have a lot of these tools stripped from it. MetaTrader isn't the only platform that has most of the tools stripped. Um, I do a lot of trading with Charles Schwab, meaning I have to get the level 2 data from outside resources and sources like Bookmap. But before Charles Schwab took over Thinkorswim, Thinkorswim actually had all of the information and the data that you needed as a professional, from order flow to market depth and time and sales, right? A nice little dome where you're able to go in and do your thing, right? Depth of market where I'm able to actually see the order book and I'm able to see the sentiment and what's on the bid and what's on the ask. So when we go in, we can see, MT4, when you put it up against real execution platforms, it doesn't hold up. Smart money requires smart infrastructure. Execution platforms, they show you where the liquidity sits, true execution platforms. But MT4, you're just guessing. So it's really no. It's a no-go. It's a nada. If you're building precision models on a platform with zero execution data, your precision is more so an imagination. Simulated platforms offer, again, no level two data. So we're really just guessing, and we can't really see what is manipulation or more so just the broker's narrative tilted in to their advantage. Real platforms are going to be routed through sources like Rithmic, CQG, or Sierra. They're going to give you a full DOM, real clearing, and exchange routing. No guessing, just actual market infrastructure based off real data. Now, don't get me started about the fills. The fill is was where it's really, really real. Understand that. So, market forensics. In episode 9, I wanted to go even deeper. I want you guys to be able to break it down to its bare bones. I've told you already, you go to your Google and you can Google simple things. And some of these things you're going to have to actually experience them in the market. Therefore, fill receipts. With Charles Schwab, you get a statement sent to you in the mail every month. It's going to go over a timestamp of all of your trades, win, lose, or draw. But on a simulated platform like MetaTrader 4, or even on a platform like a Robinhood, they're not going to give you true timestamps, right? Um, Simulation fields, they feel real until you try to route it to an exchange. One says filled, the other says cleared. Don't confuse the two. One is filling my order. The other is just clearing the path for it to be routed. Okay? That's very important we understand that. So there is no fill receipt. Okay? For the broker who is giving you a simulated fill, right? There is no clearing needed because everything stays internal on the broker's internal risk desk. But with real direct market access execution, you know the instrument, you see what type of order it is, right? You could understand the volume or the price action, and most important, the timestamp. So this is what a real fill looks like. Okay. And when you're talking about an instrument such as S&P, in this case, it was a mini S&P, there's a timestamp. There's actual clearing record or latency confirmation. On platforms such as MetaTrader 4, it's missing because it doesn't exist because the trades were never routed to begin with. They were never cleared. So this is how we can understand the demo with the costume, if you will, because that's just what MetaTrader 4 and MetaTrader 5 is. Okay, so it's a demo with the costume mainly because of the tricks that you're faced to deal with. MT4, it tricks you into treating it like it's Wall Street when it's really an online casino, when it's really Vegas. You're not trading liquidity, you're trading graphics. You're trading the broker's line code based off his server. When you think you're trading gold, you're actually trading a line of code. So in reality, with these shady MetaTrader 4 retail offshore brokers, they give you unverified price zones, okay? Off-book broker controlled fills. And we'll say it again. No DOM, no clearinghouse, no real order ladder. It's just all broker controlled logs. Okay? But real execution, real direct market access, real futures commission merchants, they'll verify by real market depth data. You're routed to a true exchange and your fills are transparent and you're getting a receipt for these fills. You're actually having your orders cleared through an independent clearinghouse with verification. Market depth, you get a full depth of market with real bid-ask ladder. Okay, in the audit trail, you could see it go from the exchange plus a futures commission merchant, real clearing records. But supply and demand, fair value gaps, liquidity sweeps, right? Order blocks on MT4, all of them, they're all unverified, non-cleared, and they're all off book. That's why they're called over the counter. This is not smart money. It's dumb money. It's all theater. Again, you're trading a simulation. So you are have actually there's no access to smart money in this instance. Now, there are some platforms, retail platforms, that probably may not have level two data, but they're good for your novice traders. They're good for beginners. Okay. Same with MetaTrader 4. It's free data. If you know you're in a demo, if you know you're trading a simulation, then it's fine. Learning price action, maybe testing out your strategy. But understand in that environment where the broker can give you a fill at any moment because it's to their advantage, because they know that they're on the other side of your trade, they're tilting the odds in their favor and they're taking your money, um, then of course they're going to give you a fill. But when we're talking about real order flow, a true national best bid offer price, if there is no open interest, if there is no one else on the other side on the ask when you're bidding, or on the bid when you're offering, then you're going to sit in the queue. Okay? Beautiful thing is real brokers that are actually providing level two data and order execution tools will give you the option to do a GTC order, good till canceled, or GTD, good for the day. Passive platforms, right? Also, there's passive ones much like Acorns, your Cash Apps, your Robinhood, right? Or really, we'll say Robinhood is a little more a step up from passive, right? More so for the novice, the beginner, right? The UX UI is a little bit more, you could say, geared towards the novice trader. But for your Cash App, right? For your Acorns, well, these ones are perfect for the novice. These ones are perfect for traders that want to start out, you could say just passively investing. Yeah. Like when you're just starting out and maybe you want to invest the spare change on companies you're familiar with, investing in brands you know, that's perfectly fine. Or maybe even taking a piece of each transaction you get inside Cash App and going in and purchasing, shares on Cash App. That's fine. They offer fractional shares. Passive platforms, they do serve a purpose, right? They're great for those that are just getting started, or maybe want to just apply a set and forget strategy. Investing in brands you know. Acorns makes that, a very easy thing to do just by swiping a card and they invest the spare change, right? But know this, you're not trading on these platforms. You're just dollar cost averaging. Okay. After a certain point, you've got to graduate. After a certain point, you want to level up, right? Meaning you don't want to live on these platforms. You don't want to stay on these platforms, mainly because they don't offer level two. There is no BBO, and they're typically doing payment for order flow. We saw that a lot with the GameStop situation, and we'll go into that in a little bit in a minute. But again, they're good for portfolio diversification, automatic contributions, beginner tier, understanding because trading does have higher risk. It requires more experience, right? And a time commitment. But once you've put in that time, once you've gotten your feet wet and you become more comfortable, it's only natural for you to evolve and level up. This is the evolution of a trader, okay? You start with passive investing, then you move to better execution tools. But if you never leave the beginner tier, you never see the real game. You never accessed true smart money. And smart money gives you all the tools and resources you need to be effective trading the market. Just starting out, it can become very encumbersome, very challenging seeing all those bells and whistles on the platform. But when you start to grow, gain a little more experience with, the simple things like your tickers, right? the different price charts, okay? How to place an order, if you will, when to get out at the right time. The simple mechanics. It's time to level up, okay? Again, if you never leave the beginning tier, then you never see the real game. You never really get to experience the real market. And then you're more susceptible to the padding, the slippage, shall I say. So there are conflicts of interest, when you're trading with certain brokerages, like for instance your retail ones like Robinhood and your WeBull and Public. Again, these are places that are great for the novice to start. Okay, you can actually start placing trades, but understand that there's still a conflict of interest. We're talking about payment for order flow, right? These platforms, they sell your trades. They profit from your execution delays. You're not the customer, you're the product in this instance. This is exactly how the GameStop situation was put into spotlight. GameStop was hijacked. It's how retail got neutered, if you will. And it was mainly because you saw that they grayed out the buy button. You could only sell at that point. This is why Congress had to intervene. Why? Because when retail became a threat, smart money turned off the buy button. And this is mainly because they were selling order flow to Citadel. Citadel was bankrolling one of the hedge funds that was short on GameStop. So they had to stop the bleeding. It was a short squeeze, not by another hedge fund, but by retail. So understand that their interests are not aligned with yours. You want someone who's simply routing your order to the best exchange and getting a fee to do so. Okay? This is very important we understand that. So the platforms, they have their purpose. The Cash App, it has its purpose. Okay? If I'm investing change, it's my spare change. Cash App and Robinhood, I'm sorry, Cash App and Acorns are great options. Okay? Passive investing, but there's no trading tools. It's really just for entry level only. MetaTrader 4, MetaTrader 5, I think this is just perfect for simulation trading, simulated environment where there is no data fees. You can see the candlesticks move and you're able to groove, move at your own pace. But if the platform doesn't have a DOM, you don't have smart money execution. Okay? You have a savings app. Okay? CQG, this is professional. Rithmic, professional. Cash App is how you start, not where you trade. They give you fractional shares, but they don't give you all the tools you need to be a professional. Same goes with your Robinhood. Okay, they make it easier for you, but when it's time to really level up, it's a challenge. Now, if I'm brand new, fractional feels good. Buying $5 an Apple, it makes you feel invested, right? It makes you feel like you're actually, starting. And what better place to start? I don't care if it's even just $1, but it's a piggy bank. It's not a trading terminal. Understand that, all right? Real execution is through Sierra, Rhythmic, CQG, where you're getting routed based on the best in BBO, National Best Bid Offer. Okay, it's very very important that you understand the difference. Now, there's all these regulatory agencies out there, and these jurisdictions that you're trading out of are going to be the determining factor to the regulatory body or regulatory agency that is going to be your protector. You got CFTC, Commodities Futures Trading Commission, the National Futures Association, and the SEC, right? All these are governing bodies within the U.S., right? And then there's the FCA in the UK or a JFSA, in Japan or a CSRC in China. Okay. If you don't see the logo at the bottom of the broker's website, then there's no protection, no badge, no logo, it's no go. So before you fund your broker, check for the badge. Okay. For you're in the US, you look for NFA, you look for CFTC, you look for SEC. In the UK, you're looking for FCA, right? If you're in Australia, ASIC, but no logo means no license, no protection. You're not trading, you're just gambling offshore at that point. So it's very important we understand, and we also know what to look for. what these logos look like. Well, here's what protection looks like. And here's what it looks like when you have none, right? So NFA, you're going to see this logo at the bottom of the broker's website, especially if they're a futures broker. If it happens to be equities or ETFs, you're going to see the SEC's logo, okay? The CFTC, they handle commodities, okay? It's the same thing. Commodities Futures Trading Commission. You're going to see them at the bottom. You also go there to get your COT data, okay? You got the FCA, okay? Boom. There goes their logo. And Australia, okay? Australian Securities Investment Commission. And then you got Japan's Financial Services Agency. And China has their own. So know what the logo looks like. And if you don't see the logo at the bottom of the site, then you have no protection. Unregulated jurisdictions, they're going to have no governing body, regulatory governing body for oversight. And even worse yet, if you're not in that location where there is a regulatory agency able to help you and protect you, then you're pretty much you're up Shit's Creek without a paddle. All right. So regulatory bodies are based on jurisdiction. Again, U.S. has NFA, CFTC, and SEC. The Financial Conduit Authority in the United Kingdom. And there's a few more in there, but we won't go too deep. All right, you got the ASIC, you got JFSA. All right, understand who they are and where they protect. Retail trading infrastructure is built on regulatory oversight. Custody and clearing, execution integrity is enforced. It's not optional. Therefore, if they don't have it, they're not legit. Forensics truth. Unregulated MT4 brokers and offshore prop firms, they operate outside of these frameworks. It's not freedom, it's actually exposure. So match your location to the regulator. And if your broker isn't under their jurisdiction, your money is not protected. So as we go in, you can see that the true progression of trading is being routed through a futures commission merchant or a clearinghouse that clears equities. There's three levels. Okay, FCM is direct to clearing. Straight through processing, that's straight through. Okay, so Forex, they're just going to be routing you straight through. But not a market maker or bucket shop. But bucket shop, this is where most traders find themselves trading on MT4. They just internalize, okay, and take the other side of the trade. And this is where it becomes a conflict of interest and where you should be running. Okay, so here's the hierarchy. Here's where it's really real, and you'll find the real feel right at the top. True clearing via an exchange, independent audit trail, and regulatory oversight. You need these. Yeah, it can be complex to open an account, higher minimum, a little more paperwork. But guess what? The integrity is real. If all I need is an email to open up my account, then come on. If your broker isn't routing you to an exchange, it's routing you to their own P&L. And at that point, they don't need paperwork for that. They just want an email address and probably a Bitcoin address for you to send that money to. Straight through processors, it's a little easier to get an account than, with an FCM or a DMA, but it still has transparent flow, lower latency, reduced conflict. It's an FX prime broker in that case. And prime brokers, they're not like bucket shops. They're really just straight through processors, right? Routing your orders. Your broker's incentives determine your execution integrity. Okay? So FCM and DMA brokers, they profit when you succeed. Market makers, they profit when you fail. So understand that bucket shops, they make the market and their interests are never aligned with yours. So reputable shops, right? These are the real prime brokers. LMA X and Saxo, Interactive Brokers, StoneX. In the US, there's Forex.com and Oanda. Those are a little more reputable than some of the other ones. But true prime brokers, reputable FX prime brokers, go to Saxo or Interactive Brokers. Okay. If your broker isn't on this list, then it's not a prime broker. It's just pretending. All right. So we're giving you guys the lay of the land. Forex is fine. If this is where you are actually profitable, you're showing some success, then hey, if it ain't broke, don't fix it. But if you're not through an actual prime broker, a prime of prime infrastructure, then you're dealing with offshore MetaTrader bucket shops. And this is very important that you understand. Receipts over reputation. Don't believe the brand, believe the routing path. And believe in the regulatory agency that's there protecting your money. All right? And live and die by level 2 and order fill receipts. Unregulated means no clearinghouse, no independent audit trail, and no customer protection, and no regulatory oversight. Prime, they're regulated access to institutional liquidity with independent clearing and also they're transparent as far as routing the orders, and you can also verify. So without that live order ladder, without the market depth, you don't have smart money. You're not trading within smart money infrastructure. And you can't trade smart money without smart money tools. I need the DOM. I need the order ladder. I need level 2. Otherwise, I'm just throwing darts. So pick your path. Okay, at some point, you have to be able to make a decision to say it's time to level up. If I'm just starting, hey, it's perfectly fine. You can start with CashApp, move on up to MT4, and then you can slide on up to your prop shops. But understand, even with the prop shops are going to find themselves in some trouble moving forward because with the prop shops, okay, think about it. I want you because we have to think about our future, right? With the prop shops, it's been recently stated that ProjectX will be stripping all the licenses from most of the prop shops, the retail prop shops, in February of next year. And the only one left standing will be TopStep. Okay, so with TopStep being the only one standing, TopStep's been the longest standing prop shop out of all of them. They got the best reputation, and they're also regulated by the CFTC. So here's the truth. The future, okay, there's a future in retail, but only if you leave the simulation behind. Only if you level up eventually when it's time and when you're ready. Demo is for practice. Prop is for reps. Your own cleared account, though, that's real freedom. I want you to go ahead and make sure that you like and subscribe. Download our forensics kit below, where we actually go in depth. You're able to do a real broker audit and actually determine if you're really dealing with a futures commission merchant or a straight through processor or a bucket shop. You can also audit the prop firm. All right. But if you're not doing that, then you're the liquidity. Remember, you're either liquid or liquidity. Again, like and subscribe for more. Follow the market forensic series and join the community where you too can become an alert trader. You already know who I am. It's Mr. Wall Street, Big Guy, Don Wick, signing out of this bitch. Until next time.